2.
Welcome. My name is Pandy Pridemore, and I'm the Principal Consultant at the Human Resource USA. Oh, we have got a wonderful show for you today. With me is Carl Ulrich, an attorney with Sibley, Shillitoe and Dyer. Carl?
Hi, Pandy, how are you?
I'm good. Carl was with us on the first show, answered a lot of questions about the Families First Coronavirus Response Act. And your questions and responses to that show were just wonderful, wonderful. We want to come back to some of the current questions and concerns about the programs within that act and how you as businesses can start looking at those and kind of dissecting them down. Because as we learned in the first show, each one of those, the paid sick leave and the extension on the Family Medical Leave Act, has criteria. And we want to make sure that we're meeting that criteria and then also adjusting to all the changes that come with those two programs, which will, again, as a reminder, will expire at the end of this year. So, Carl, I am getting a lot of questions and responses, a lot of confusion around how we address those conversations regarding health. Because again, everything in terms of being able to qualify for one of these events has some kind of a relationship with COVID-19, right?
Right, it does. Well, maybe we'll start by talking a little bit about the basic rules before COVID-19 came along. I mean, what are the things that employers can do and not do? And most of this is related to the Americans with Disabilities Act, the ADA as we call it. And there are also state analogs. So most of the state laws for smaller companies are the same as the federal laws. So what are the rules really? Well, this really comes down to two things: disability related inquiries. What can employers ask of their employees? And when can employers require certain medical exams to be performed on their employees? That's really the territory that we're going to cover here. And then how do those rules change a little bit now in light of the global pandemic that we're experiencing? Well, first of all, for the most part, the ADA says employers can't really ask questions about disability, can't make disability related inquiries, and really can't require medical exams except in very limited circumstances. So in most cases, you're not really allowed to ask a question about medical condition or physical health if it's going to lead to a disability-related inquiry, unless it goes to things like employee's ability to perform the essential functions of the job. You got to know whether that employee can do the job, right? And so if there's a physical limitation that's obvious and apparent, you can ask questions about how they might do the job given the job requirements. And there may be situations where an employee's condition represents a direct threat to coworkers. And we're going to talk a little bit about OSHA perhaps later on, but for now we're just talking about what kinds of questions can be asked by the employer. Situations where there's a direct threat, that might be an exception to the general rule. So that's kind of the landscape within which we're working. Now you got a COVID-19 pandemic going on right now. You got people who are either exposed to others who are infected, may not have symptoms right now, so they're asymptomatic. Mm-hmm. Or you may have people who are experiencing symptoms in the workplace. How do you deal with those people? Well, let's say you've got somebody who is the easier case. You've got somebody in the workplace who is not feeling well. Can you ask questions about, are you experiencing symptoms relating to COVID-19? EEOC says absolutely. You can ask those questions. Goes to their health and safety. It goes, there's a direct relationship to business need there. They're working, they're feeling ill, just as if somebody were in the workplace with the flu. Are you feeling well? Are you experiencing it? Why don't you go home? You can clearly do that. You can clearly ask questions. Somebody is off on a trip somewhere overseas or out of state. They come back to work, and can you ask questions of them? They're asymptomatic. They don't have symptoms right now. Can you ask questions of them about whether they've been exposed potentially to people with the virus? Can you ask those questions? Well, the EEOC isn't really clear on that, but I think it's reasonable to assume that those questions would be, again, consistent with business necessity. Remember, COVID-19 can be passed along to others even before the person carrying the virus is symptomatic. So it's reasonable to ask that question before they even have symptoms. And I think the EEOC would probably back that up. The other question, of course, is more complicated. And what if you're asking the employee whether or not they have other pre-existing conditions which might relate to or make them more susceptible to COVID-19? In other words, you're inquiring about other things. Here's where the EEOC seems to draw the line. You can't really ask about those other conditions. You can ask them whether they're experiencing symptoms, whether they're feeling well, whether they've been exposed to others, but you can't really get into their medical history about whether they're particularly susceptible to the illness. That seems to be a line which the EEOC has been drawing.
And we've had a number of comments about clients, I mean, companies that literally call me and say, but I want to protect them because I know their age. I know what we've experienced in the past with them. I don't want anything to happen to them. You know, they're part of the family, but there's the line.
Right. And again, we're talking about a situation where the employer is initiating these conversations, is initiating these questions. Now, an employee could come to you and say, you know, I'm 62 and I've had asthma all my life, and I've had some respiratory issues. I'm particularly susceptible to COVID-19. They could disclose that to you voluntarily. And what do you do with that information? Obviously, you know, there may be a decision to be made there. If they're requesting time off, you have to consider whether it's appropriate to do that. It might be in many cases appropriate to give them time off. But again, digging into past history, digging into previous health history in an effort to assess risk is apparently, at least for the time being, a line over which the EEOC would not have you step. And so there are some limitations in that respect. I think a more interesting problem might be the medical examination situation. Remember, the ADA says you can't do medical examinations except under certain specific circumstances. What if somebody, an employer wants to do standard temperature tests for fever testing for every employee when they report to work in the morning? Now, this is becoming more and more common. We're seeing this a fair amount. Employers are inquiring about that. I want to test all my employees when they come into work every morning to see whether they have a fever. If they've got a fever, I'm going to send them home. Is that permissible? Now, under the old rules, before the pandemic, it's clear it would not be permissible. It's a violation of the ADA. But the EEOC says in a pandemic situation where you have community-wide infection going on, and we do now, very clearly, this kind of inquiry is a health and safety necessity. But they also have a caveat, and everybody should be aware of this, you know, because people can come to work carrying the virus, it can be able to transmit it. They might not even have a fever when they're in that condition. In other words, they can pass the virus on even before or without a fever. And so using the temperature test isn't a panacea, isn't a perfect test, and you got to really be careful about that. But for now, during the ongoing pandemic, the EEOC says that kind of step is necessary. In some cases necessary, but certainly permissible. And by the way, the state of Ohio governor's office has already indicated that employers in Ohio should consider doing that. So there has been some movement in that direction anyway.
And some companies are only checking temperature if an employee claims that they're carrying one. And we're already seeing individuals who are trying to come up with every excuse possible to fit within the mold of those plans so they can go home and get paid on one of those two plans. And the fever seems to be, they've all honed in on that, seems to be one of the most pivotal symptoms. So I've got one employer that I talked to this morning who said, hey, when they even refer to a fever, I'm ready, I'm right there. And if they don't have a fever, they're not going, you know, I asked them to stay. So it's interesting. I never thought I would see people taking each other's temperatures, but.
Well, and this is a particularly troublesome situation because you've got a condition really which is sometimes asymptomatic. You know, you can be carrying the virus, you can pass it on to others even before you have a fever. So it's not a definitive test. And there may be other things you need to be doing, like, for example, asking whether they've been exposed to others. They may have been exposed to somebody with a virus, be carrying it, but be completely healthy. And so there may be other ways to screen and protect your workforce. So again, those are the kinds of, I think those are the issues that we're seeing most frequently now with respect to the ADA and the COVID-19 pandemic.
And I'm encouraging self-reporting. I'm encouraging that dialogue with employees to say, hey, don't hesitate to tell us if you've been exposed, or don't hesitate to tell us if you have tested positive. Because normally, that's protected information. I'm even trying to help them understand that they can't then go back to the entire department and say, hey, Sally tested positive, so you've all been exposed. It's better just to say we've all been exposed, and not give the name, because that hasn't changed necessarily, correct?
That's correct. I mean, I think there are some rules that would allow you in an appropriate case to disclose the person who is infected if it's necessary and necessary to protect others. You may be frankly allowed to do that, but I think it's wise for the most part, as a general rule, to protect this information fairly carefully. Disclose on a need-to-know basis only, and that's a good sort of practical suggestion for this sort of thing. If there's a situation where to protect someone, you just absolutely have to disclose their name, it's probably permissible to do that, but you do that only very rarely and only in extreme cases.
Yeah, I completely agree. I think, but again, the self-reporting would be wonderful for everybody if everyone would just come out and say it. However, we're still running into a lot of questions about, all right, so I'll throw one out here for you. The grandmother who's babysitting the young child wants to self-quarantine. So the employee says, well, I need to stay home with my child, so I want to use as my qualifying event for both paid sick leave and the extended FMLA. And yet the grandmother does not have any symptoms. She's not associating this with COVID-19 in any other way other than she's just afraid somebody's going to expose her. And the employer is saying, well, then I obviously can't get documentation from the parent. So I requested documentation from the grandmother to say that the doctors were saying, yes, you are high risk. You should be quarantining yourself. These are challenges that the employers are getting.
Right.
Requesting documentation is sometimes not just from the employee, but it's on down the line.
Well, or even just a diagnosis of COVID-19 or getting a test in and of itself for the virus is problematic. It might not even be possible to get a test done if your symptoms are light or you're asymptomatic, but you believe you've been exposed. So you may sometimes the employers may have to take this on faith. There may not be medical information available to support a determination. You may have to make a good judgment call. I think health and safety is probably first priority for workplaces, and we'll talk about OSHA in a minute here. There may be an OSHA requirement to take more general precautions like that in the absence of corroborating medical information. You may need to take certain precautions anyway, but I think there's going to be that is going to be a consistent problem, and a lot of employers are facing that. So you have to make a judgment, and my general advice is protect the health and safety of the workplace first. Right.
And it's interesting because I sometimes hear individuals, come up with these excuses as to why they want to stay home. And then I come back and say, well, you have to be reasonable about it. We go back to the extended families and the children, dispersed among different parents. Some of that is pretty well explained, and some of it you're just not going to get explained. Many of them, the telemedicine processes will give you a health website to go to, and they'll put a declaration on there. One individual told my client, well, you can just go onto my health records and pull it up yourself, which I don't recommend.
Probably
in
not a
any
good
way, shape,
idea.
or form. No.
You want to put that in writing?
Yeah, no. They also have to, you used a term, the rule of reason, and I dropped that in the last show. You want to explain to everybody what that means?
Well, I think in many cases when you're making judgment calls, I sometimes use this term as a short form way of saying that, you have to be reasonable in your approach. You have to do what's in the best interests of your organization with proper balance and concern for your employees' health and welfare. So oftentimes there are no bright line tests, and I think if you are uncertain about what the particular rule might be in a given situation, oftentimes the rule of reason helps you. What is reasonable and fair in any given situation is sometimes a good backstop. So that's kind of what I was referring to. But again, I think what we're seeing in this situation with the global pandemic is we're seeing the rules that the EEOC typically applies to medical examinations for one, disability-related inquiries for another. Those rules have changed a little bit, are a little more flexible because of the nature of the risk, because of the high level of risk that we see, and because of the fact that this virus can be transmitted without anybody even really knowing it. So that increases the risk substantially. So I think what we're going to do is you're going to really have to sort of opt in favor of health and safety over strict compliance in some ways, because that's sort of how the EEOC is looking at it right now in light of the pandemic. So that's my overall view of it. I wonder if we should maybe take a quick look at the OSHA rules too, because this kind of ties in, Pandy, with some of what we were talking about earlier. What obligations do employers have to protect their workforce?
Absolutely.
Generally
Absolutely.
under OSHA rules, right? And I know
Yeah.
you've encountered these too. There are no COVID specific regulations. Clearly, obviously, the regulations don't deal specifically with the coronavirus, but one of the things to consider is that the general duty clause of OSHA does require employees to keep their workforce free of known hazards. And they have to take all, again, reasonable measures to do that. We talk about the rule of reason, right? That's really kind of embedded in this idea of general duty under OSHA. You take reasonable measures to keep the workplace safe. And that may include, screening people coming into work. It may include asking questions about who they've been exposed to, whether they've been exposed to the virus. It may include a variety of things that we just talked about, consistent with your obligation to OSHA. But again, there are no specific obligations beyond that general duty clause with respect to, certain specific things. The general duty clause really is the key barometer here. The other thing I wanted to mention real briefly was, there are certain reporting obligations to OSHA. And one of the things that comes up frequently in my practice is, when do we have to report to OSHA that somebody has the COVID-19 virus? Well, you got a couple things here. You got the reporting obligation to OSHA. You pick up the phone and you say, hey, OSHA, we've got this thing. And then there's the filling out of the OSHA logs, right? So there are two different things. The reporting to OSHA really only kicks in if you have a workplace caused event that results in hospitalization or death, right?
Right.
Which is probably not going to happen very often, at least hopefully in the COVID-19 situation. And even if you have somebody who's been hospitalized or, God forbid, who dies as a result of the virus, the fact that it may or may not, it's unlikely to be proven related to the workplace, probably doesn't, unless it's clearly caused by workplace conditions, it's probably not reportable in that sense. As far as the OSHA logs are concerned, again, you only report what is workplace caused, anything that happens in the workplace, and it's unlikely to be, it's going to be very difficult to prove that somebody gets COVID-19 through workplace exposure. I suppose I can imagine situations where that might be clearer. You could imagine circumstances where it seems obvious, that they were exposed to it in the workplace. But for the most part, that causal connection is going to be very difficult to establish. And so your reporting obligation doesn't kick in unless the workplace connection is clear. So again, I think those are some of the questions I've been getting on the OSHA side about, and there's a lot of the same kinds of issues that are going to be coming up over the 2 months, I think.
Good. Well, to kind of summarize, then I want to reiterate that again, the guidelines and rules around conversations of health basically really haven't changed when it comes to anything outside of COVID-19. COVID-19 sits on its island, and anything around those symptoms and those health conditions are simply their own little world and their own bubble. And anything otherwise, the world that we knew 6 months ago still exists in regards to individuals with diabetes or heart disease or a bad back or allergies, asthma, migraines. I mean, all the other things that can be classified under ADA and the conversations and what we do and manage with that health information. I want to deviate a little bit further, Carl, and I'm going to kind of surprise you because I didn't prep you on this one, but I am getting a number of calls of individuals who are pregnant. And not only do they not want to be in the workplace, but they also are concerned about coming back into the workplace and exposing their young children. And so my companies are going, well, we just want to put them, out.
Mm-hmm.
And the dilemma is I keep reminding them that you still have the protections under ADA for them. You still have their short-term disability if you offer that to your employees that you have to take into consideration. So none of that changes. Even though COVID's out here floating around on top of us, you still have to meet all the other criterias and make the accommodations if you can for them. You have to put them on short-term disability if you can, if it's appropriate, if the doctor's requesting it. Even FMLA, we haven't said anything about FMLA, but standard FMLA for individuals like a pregnancy still exist. So all these paid leaves, sick paid leave and the extended FMLA can be a distraction. And if you have these kind of situations and circumstances in your workplace, I highly recommend you partnering with someone, either your labor law attorney or a consultant, and just talk it through. Make sure that you're taking into consideration nothing slipping between the cracks, and we're treating these individuals fairly because their pay is getting cut, their hours are getting cut, and there's just too many moving parts with the pregnancy. So I did want to add that one. Did I miss anything on that one?
No, I think you covered it.
Good. I also want to just touch real quick on what Carl said and what you said about seniors. Please, I understand that employers want to take good care of their long-term employees and those, but remember, you can discriminate at this time if you start pulling them out of particular jobs or you start treating them differently and cutting their hours before everybody else's. I mean, there's a whole array of things that can happen with that group, all in the sense of wanting to take care of them. So again, a partner so that you know that you're not crossing any of these lines incorrectly and that you are meeting all the other laws that are in place that haven't gone away. Because again, we want to treat everybody fairly, but believe me, you got to stay focused on the needs of the business, obviously. And then you've got to treat everybody fairly moving forward. And truly that is protecting them. It's protecting you as well. So, again, last thing I want to bring up is we all know that the IRS is going to extend these tax credits associated with FFCRA. And I think that's where the panic of the documentation is coming in. What can we ask for? How much do we need to support, using these plans? And you and I have an actual request off form that we came up with that's fillable. So you can send it out to the employee if they are too ill to come in and complete it. But we've also got a response form, very, very close to the traditional FMLA response form, to say this is why it's approved, this is why it's not, this is how it'll be paid, this is how you're going to take it. I mean, it's a great place to start your documentation, but if you have your own, please use it across the board for everybody. Carl, anything to add to that?
Only one other thing to add. I get asked you about document retention. Now we're creating all this paperwork for various short-term leaves related to the COVID virus. How long do we have to keep all that stuff, right? Hopefully one day this is all going to go away and we're going to return to normal. We can keep our fingers crossed. The IRS regulations, document retention regulations, suggest that this information, the request information, the decision information, the leave granting, the document that grants the leave, that issues a decision on the leave request, all that supporting information that you gather, all that should be retained from for up to 4 years from the date of the payroll. So the date that the date of the payroll, that the date that the payroll taxes are due. So if for a particular period, if you've got payroll taxes due on date X for the particular period of leave, it's 4 years from the date that those taxes are due that the documents are required to be retained. After which, then you can dispose of them, at least according to the IRS rules. There may be situations where you're going to keep them longer if you have a longer document retention period. That's certainly fine, but that's the IRS rule.
Thank you. Thank you for mentioning that, because I used 3 years here, probably in the very first show. So thank you for clarifying the update on that. Let me also add, and please jump in, Carl, if you have someone that you sincerely want to keep on your payroll as an active employee, and yet you really want to protect them, here's your out. You know, as an employer, you can put someone on an unpaid leave. If they don't fit the COVID reasons for the paid sick leave or the extended FMLA, and you just wanted to let them stay at home, you can put them on an unpaid leave, a personal leave, or you can pay them extra PTO or come create some new vacation or something for them. That's, as long as you're distributing that fairly, you can do that. It's up to you as an employer, but you just need to be kind of cautious and document the reasons why and how you're doing that. Carl,
Yeah, I agree. I think in principle, employers can always do more than the law allows. They can provide benefits to folks who might not be eligible for the leaves that are provided for in these new laws, or enhance those leaves in a variety of other ways, including pay where pay might not always be required. But so enhanced benefits are certainly possible. And so I think that's it. But I think the point that you raise is a very important point to reemphasize, and that is that when you do those things, when you provide those benefits, when you give enhanced benefits to individuals, you distribute those benefits in a fair and equitable way. You want to make sure that they are not given to just the favored employees, not given to just the people that you work with on a daily basis and you ignore the rest. In other words, there has to be a system or a process for distributing those benefits that is objective, that is reasonable, and non-discriminatory. So that's, again, something I think going back to what you were talking about earlier.
Yeah, perfect. You're so eloquent. You know just how to put it. I just thank you. You make me look good. And someone else is going to make me look good here real quick is the second part of what we want to talk about today, the CARES Act. I told you in the last show that I was going to do everything possible to get somebody with a financial mind on to help us understand some of the gaps that could be appearing or things that we could be missing, help us understand why there's not a lot of information and yet there's so much information we can't process it. So I am very excited to tell you that we have Britt Sears here from the Emory Federal Credit Union. Britt is the host of a monthly show sponsored by the Sharonville Chamber of Commerce called Business Talk. And Carl and I are very blessed to say that we appear on there with him every so often, monthly, talking HR monthly. So Britt gets to sit in a different chair today. He actually gets to be an expert rather than a host. Britt.
Hey, how are you?
Our expert in finances.
Oh boy, I tell you what, it's a popular time to be in this business.
Well, you're in the hot seat now.
Well, we're doing our best. The last meltdown that we had back in 2008 was caused by the housing, industry, and the lending industry. And this time, we were pretty strong with housing and the banking industry up until a month or so ago, until this, health crisis happened. And of course, now thank heavens we're in a much stronger position as an economy, so that moving forward, I think we're actually, especially with all the stuff that the government's doing and everything, I think we're going to be positioned well to come out of this relatively quickly. It's really sad that we're really humming so well, and then all of a sudden have to, we've never had to, in history that I know of, we've never completely shut down the entire economy.
Mhm.
And this is something that's totally brand new. All the stuff that we're dealing with is fluid, and obviously the number one goal right now is to defeat the virus, right? And keep everybody home, and get the curve flattened and get people well again and everything. But I think number one, as somebody in the banking world, I want people to know not to panic. Stay calm. There are a lot of things that you can do to keep yourself solvent. Hopefully, if you still have, if you're a private individual and you still have your job and so forth, obviously you can continue to pay your bills as normal. If not, I would recommend that you call your creditors. Most of the lending institutions out there right now are offering some sort of payment deferral situation. I know we are at the credit union of people that are in need and so forth. You can actually defer a lot of your loan payments for as much as 90 days for a lot of us. So number one, don't run. don't bury your head in the sand. Reach out, call your creditors, and I can assure you we're all going through this together, and they will work with you. Okay. Specifically, as far as small businesses are concerned, which is the main thing that you wanted me to talk about on the show today. Everybody right now is clamoring for the Paycheck Protection Loan.
Yeah.
That's the hot topic right now. So to give you a little bit of an update on that, and if those of you that are business owners out there that have businesses with less than 500 employees, I'm talking to you. Okay, this is part of the CARES Act that the government passed. There's about $350 billion that the federal government is going to provide in aid to assist you with keeping your employees and covering your payroll expenses. So from the time period of February 15th to June 30th, about an 8-week period, right? You have until June 30th to actually apply for this particular loan. It's called the Paycheck Protection Loan. And its purpose is for keeping businesses operating, through this pandemic, when everyone has to stay at home.
Mhm.
So what are the funds allowed to be used for? Well, payroll costs, rent, interest payments, utilities, and as long as at least 75% of this loan is used for those purposes, the loan could be forgiven. Okay. So this is really a true, huge benefit for employers. The loan amounts can go up to $10 million or up to 2.5 times the business's average monthly payroll, whichever's less. The interest rate on the loan, the portion that won't be forgiven, will be at 1%. Has to be paid back within 2 years, and there are no payments for 6 months. Interest does still accrue on this loan, but there is no payment for that 6 months. Forgiveness up to 100% of the eligible expenses that are paid from the loan funds during the 8 weeks following the closing of the loan. And there are some, there's going to be some documentation that you're going to need to provide to apply for this. We'll talk a little more about that here in a second.
Good.
There is no collateral, no guarantor support, none of that. So all the normal stuff that most lenders would.
Oh my gosh, I didn't know that. I hadn't heard that.
Yeah. This is for the Paycheck Protection Loan.
Yeah.
for funds deposited, the name of the business account must match the name of, the business and the checking account that it's going to be put into. They also, hopefully, we won't end up with a bunch of fraud with this. Unfortunately, with a lot of government programs and everything
Right.
that could be wrought with fraud. So they do want to make sure of that. Now, people ask, how am I eligible? Well, if you're a small business with 500 or fewer employees, if you are a 501c3, they are also acceptable. An individual who operates as a sole proprietor could potentially be eligible for these funds too. An individual who operates, who is self-employed, who regularly carries any trade or business. They even include tribal businesses, veterans organizations, churches. So a lot of folks are impacted by this that are eligible. Okay, so what do they need to do? Well, they need to fill out an application.
Can I interrupt you real quick? How old does the business have to be? Because that might help with the fraud issue.
What's that?
That might help with the fraud issue. Is it
The way I understand it, and I could be corrected on this, is that you would have had to have been in business, prior to February 15th. And as far as looking at your payroll, I mean, they're going to go off of your 2019 payroll numbers.
got it? Okay.
Yeah, you would pretty much need to,
If you don't have those, you might not be eligible.
Right. There are some other loans that some people could be eligible for too. The economic injury disaster loan, the $10,000 grant. That's another thing that you could also apply for through the SBA's website. Now, a lot of people are asking, how do I do this? Who do I go to get this? I'm going to recommend that you go to your current bank, your current financial institution that you're currently doing your finances with, okay, do your checking accounts with. Perhaps, obviously, if you have an SBA loan already outstanding with a particular bank, utilize them.
Yeah.
Technically, you can go through any SBA 7A lender, but I will tell you a lot of lenders right now are, limiting who they're applying for this help with with their customers. They basically want to just use their particular.
Oh, so don't go bank hopping.
Yeah. And I will tell you too, so that's the good news. The good news is there's a lot of help here. This sounds really great. In fact, if you listen to the Treasury Secretary Mnuchin, he has indicated that, this $350 billion could possibly go very quickly. And they've already asked Congress to maybe provide another $250 billion. So there could be more coming and so forth.
Mhm.
So this is good. This is awesome. And they're doing their best to get this, done through SBA lenders to get it to the street as quick as possible.
Okay.
So that's the good news. Now I'm going to kind of be the Debbie Downer here for a little bit. What are lenders dealing with right now? Well, this started on April 3rd is when businesses could apply. The sole proprietors can start applying on April 10th. Now, here's one of the challenges. This is like any other major fast relief type program. Lenders are taking the applications. The problem is that the SBA and the Treasury has not given much guidance to lenders as to how to actually fund these loans and how this is actually going to work.
Okay.
So there is some confusion here. They're taking the applications, they're getting them sent in. I will tell you the SBA's website, their program that lenders use to get these loans processed has been crashing because of the volume.
I'm laughing with you. I'm laughing with you.
I would love to I would love to, laugh about it, but I mean, it's very frustrating. And obviously everybody, all the lenders out here, they want to take care of these business owners. They want to do the very best they can to get this money, as quick as possible. Some of the challenges is, how exactly are the loans going to be funded? How are the lenders are going to have to use their own funds to fund these loans. And then they have no guidance as to how the funds are going to be
Oh my gosh.
actually reimbursed to them. or how the servicing is going to work.
Okay. So needless to say, we don't really have a timeline as to when any of these funds will be distributed.
Not to my knowledge right now. I mean, I don't want to speak out of turn. I mean, there may be some lenders out there that have just gotten this from the SBA, and maybe they're sending checks as we speak, or depositing money as we speak. But I think as of right now, it's all a little bit still. We don't have guidance, I guess is the best way to say it.
Well, and you mentioned when we were talking about this earlier, you even mentioned that some banks aren't getting, it's not evenly distributed among all financial institutions. Some banks are getting more than others, and it really doesn't matter how big the financial institution is necessarily. So you can't expect the most popular and most well-known, well-branded banks to have the most money, correct?
Right. There are some limitations as to how much of their assets that they can use, because there are still banking reserve requirements and so forth that banks are required to adhere to. So,
Fred, I have a question. I have a question too, if I could interject real quickly.
sure.
I don't know. This isn't really my area, but the SBA program has what I think what lenders are called preferred lenders, right, for small business loans.
Yes.
Is there some advantage for entities to be going to preferred lenders as opposed to those who might not be preferred lenders for purposes of getting the PPP loans?
Well, technically, any SBA 7A lender can do these. Now, I will tell you that you're going to get some different answers from different entities. Some of your really big entities delayed accepting applications because they haven't gotten this guidance.
Mm-hmm.
So it may or may not make a difference.
Yeah.
Carl, on that.
We just don't know at this point, right?
Yeah. Now, I think this is all going to be figured out? I mean, as quickly as possible? Yes.
Sure.
They're going to process these as quickly as possible. They're going to do their very best to get the money to the business owners as quickly as possible. So I don't want you to be, discouraged or think somehow that you're not going to, get yours. But just know that, your bankers are certainly working overtime trying to, get these put through for you and get all this, processed. Mm-hmm. So I would say, be patient. You make sure that when you fill out the application, I mean, the application for this is not all that strenuous. You answer 7 questions. You attest to the fact that you are going to, that you're going to provide certain information. That you don't have any other current SBA loans, going right at the moment, that sort of thing. But it's not super difficult. You're going to need your payroll information, for the last year. So you're going to need to make sure you have all that documentation handy.
That's been a challenge for some of the companies that I've spoken to, in that they're not using the popular, the real sophisticated payroll services. They're leaning towards a little bit more personal, private type individuals who don't have the reporting capabilities. And it's been really interesting to see the challenges, because at this time it's all a matter of timing. And so a lot of companies that I've been talking to said, I may have to reassess who does my payroll and the kind of requirements that I have for them. So what would you say, what is the most important information when you're talking about 2019 payroll? What are they actually looking for, Britt?
I would say you definitely have all your 2019 tax information, your payroll information. They're not really supposed to be asking for a whole lot of documentation, although I've been hearing through the grapevine, through some of my other, financial colleagues out here, that some lenders have been asking for additional documentation that really, no one really expected. So that's frustrating some people, of course. I will tell you this, you think about what monumental task this is. What a monumental task this is. This is going to be, the SBA, I guess, does, somewhere a little over $28 billion in SBA lending last year, maybe, and they did that over the whole year. And we're asking them now to fund $350 billion in 2 months. Just wrap your mind around that for just a moment.
Yeah, so needless to say, they're hiring right now. Is that what you're telling me?
Actually,
There might be some really good jobs over there.
they,
Can they stack these different programs? So like the employee retention, you mentioned that loan, that $10,000. Can they stack the PPP with some of these other plans? And let me ask this question, because this is taking so much time and we're not really sure who's going to get approved and who's not going to get approved based on limited funds, should they be applying to several of them?
Well, if they applied for that initial $10,000 grant, that will be applied toward the forgiveness part of the PPL, the Paycheck Protection Loan. They can also, still apply for regular SBA 7A loans. I would say, probably just one. I don't know that you're going to be able to get the benefit of both, other than if you've already gotten the initial EIDL loan, which gave you that $10,000 grant. But they would subtract that off of the forgivable portion of the PPL.
Okay.
So, I would say, do your best to work with your current banker on this loan. Be patient. Keep in mind, obviously everybody wants the money as quick as possible, but obviously the more time that goes by, the more the more freed up, I guess, everybody's going to get. And plus we'll become more knowledgeable about exactly, how everything's going to work. We can anticipate a little bit better, we could tell somebody, okay, this is how long this is going to take, and this is how it's going to work, and so forth. That's one of the things that, since we've never done this before, we're figuring it out as we go. And, we're feeling our way through it, and, we will get through it, and, the money's it's going to be there eventually. I just hope that, everybody, if they do what I was saying before, if you contact your creditors, conserve your cash, obviously. The idea behind this, is to retain as many employees as possible. So, hopefully you will, in fact, bring back as many of your, laid off employees as possible. And I do hope that we will end up seeing, we just saw 10 million plus people file for unemployment last week, or in the last couple of weeks.
Yeah.
I'm hoping that a good portion of those will come back and we'll see more of a V recovery. There are naysayers out there that say it's not going to be quite as quick, but I would like to be optimistic and hope that with this kind of intervention, and if companies, if the quarantine is lifted and we're able to get out get out and do things again, I hope that everybody will take it as their patriotic duty. To go and frequent, go to the restaurants and go and do the things that we would normally do, and then some, so that we can see as much of a V type of recovery as possible. And the most optimistic projections that I'm seeing or hearing is that, we'll get back on track here in the third quarter, and then, the fourth quarter can show some really significant recovery. I've heard other people say it's probably going to take at least a year to get back, to a full recovery. But we'll see. On a personal level, personal individuals, dealing with your own finances, as a banker, I would say, once again, communication is key. Call up, your car loan lender, call up your mortgage company. Call up, if you have personal loans outstanding and that sort of thing, call them up and try to find out what they're doing. Most lenders are doing some sort of a forbearance situation. And most of them, I want to caution on this too, by the way. Just let's talk about mortgages for a second. Some of the mortgage lenders out there, mortgage lenders are offering forbearance. Now, you have to be very specific with your lender. Get it in writing, or make sure that you get something that truly verifies for you how the forbearance is going to work on your mortgage. Forbearance normally looks like this. They give you a 3-month forbearance. You don't have to make payments for 3 months, okay? Now, before you get excited about that and think, woohoo, I don't have to make any payments, that's free money. That's not how this works. You still owe that money. You still owe those 3 months. Okay. And the way it works for a lot of mortgage companies is they defer you for 3 months, and then in the 4th month, you owe the 4th month payment plus that previous 3 months payments all at once. That's going to be a real hardship for most people. That's actually not helpful.
Right.
Okay. Now, some will do it another way. They might take the 3 months payments divided by 12 and add that to your monthly payment in the 4th month. And then you, over 12 months, will pay back the shortfall. That could still be a problem for most people. The third thing that can happen in the best way, and what I hope will happen, which is this is more of how we do it at our financial institution, is we're delaying your payments for 3 months. You don't have to make payments for 3 months. We add that on the back of the loan, and you just pick up in the 4th month making your regular monthly payments. I hope and pray that more lenders will do it that way. And I think that's what a lot of people think when they hear forbearance, but they got to make sure they totally understand that. Otherwise, they're going to find themselves in a big problem. I will also tell you that if you can make your payments, make your payments. Okay. Because again, this is another whole other area of the mortgage industry. When the feds did this with the CARES Act, they actually ended up inadvertently hurting the mortgage industry because they went in and purchased a whole bunch of mortgage-backed securities and everything, which totally messed up how mortgage companies hedge their rate locks and everything. So they ended up losing tens of billions of dollars because of how they did that. Mm-hmm. And then if you think about it, servicers, people that service your mortgage loans, whenever you make your payment, if those loans have been packaged up as mortgage-backed securities and then sold to Fannie Mae and Freddie Mac or Ginnie Mae, okay, the servicer that takes those payments every month, okay, they take those payments and they have to actually make payments to the bondholders. Okay, if you're not making your payment, they don't have that money to make those payments to the bondholders. Creates a huge problem. Okay, so again, if you don't have to, if you can make your payments, make your payments. Mm-hmm. Okay, because like I said, it's kind of this has been a whole domino effect. It's affected every part of the economy now. And for an industry like the mortgage industry that recovered from the last crash, who was really strong going into this, well, some of the things that the Fed just did just jeopardized the strength of a lot of mortgage companies.
Hey, Brett, I think
they'll come up with some more facilities to help with that shortfall and everything. I know FHA has, but you're going to find that FHA and a lot of other lenders have now raised their guidelines over and above the normal guidelines. They've started to put their own overlays over and above the actual FHA guidelines because the fear of writing bad loans or people, they're also doing verifications of employment day of closing. Make sure you're still.
So that means it's going to be even harder for individuals to buy a house moving forward, possibly?
Possibly, yes.
Oh, wow.
Yeah, they're basically, if you have under a 680 credit score, it's going to be much tougher. Where before, if you had an FHA, if you're going for an FHA loan, a lot of lenders would go down to 520 credit score, sometimes even lower. But a lot of them have, have started to, kind of cut out a lot of the lending that they were doing in the lower ends of the credit spectrum. I'm sorry, you were going to say something a minute ago, Carl, and I think I kind of interrupted.
No, I was going back to the deferral of personal mortgage payments and where you're escrowing insurance and property tax and things like that. I suppose there's also the collateral risk that some of that doesn't get dispersed if you're, so you not only have an issue with respect to making up those payments to the mortgage lender, but also, what happens to the tax, what happens to the insurance, what happens to all the escrow
it still
disbursements.
Has to be paid. The servicer still has to pay that. And once again, if they're not receiving payments, that creates a huge problem for them.
Mm-hmm.
Oh my gosh.
Yeah.
This just keeps getting better and better, don't you think?
Yeah.
It just keeps getting thicker and thicker. And those kind of points, Britt, and again, everyone who's watched this show has heard me say over and over again, and you know this is my mantra for anything that you and I work on. It's relevant. The information is relevant and it's impactful, and people need to know this stuff. You want to be able to give people information so that they can make better decisions for their lives and their employees and their businesses. And boy, I didn't even realize you were going to say that kind of stuff. That's fantastic. Is there anything else caught up in that head of yours that we need to share with the viewers before we end the show?
Well, anytime you go through a financial crisis, you want to basically build the four walls. Okay. Make sure that you, as far as expenses, that you take care of food, shelter, basic transportation, and clothing, obviously. But I would put in the shelter part, utilities. Okay, so you keep all that stuff on. If you are in a crash crunch, you take care of those items first, and everything else can wait. Okay, and then we get back through. We're going to get through this. And when things get back on track and you're able to go back to work and everything, luckily with a lot of the help, none of this, this happened from no fault of our own, right? So, all lenders and the government and everyone is doing their very best to provide some assistance. We'll have to tighten our belt for a little bit, and it may take a little bit to get back on track, but we will get through this. And, do not lose heart. Everything's going to be okay.
Thank you. Carl, any last words in regards to health conversations, disclosures and inquiries?
No, goodness. I think stay tuned. We'll have more next week, I think.
Oh, I can guarantee you we've got more coming next week. Thank you again for watching, and we welcome, as always, your comments and your questions. Guide us into what, again, you need to know to get through this COVID-19. Tell us what you're struggling with. Tell us what we can help you with. As Britt said, we are all in this together. I want to thank, again, Carl Ulrich from Siebele, Shillitoe and Dyer, Britt Skiers from Emory Federal Credit Union. My name is Pandy Pridemore with the Human Resource USA. Let me leave you with this bit of advice. I saw a little plaque the other day and it said, life is not about making it through the storm. It's about learning to dance in the rain. And that's what we all need to do right now, is learn to dance in the rain. The storm is not going to go away. The rain's not going to go away, but we've got to pull some serious positives from this. Remember to communicate. If you're a business owner, communicate with your employees, your bankers, your brokers, your 401k financial planners. And if you're an individual working through this, communicate with your employers. Let them know what's going on in your life. Tell them what is going through that you need to talk about. Don't try to do any of this alone. None of us should be alone. Until next week, thanks again for watching.